The Dow falls to a 3-week low, while soybeans move to record highs. Hello, Market Club members everywhere. Adam Hewison here, co-founder of Market Club, with your midday market report for Thursday, the 30th of August. The Dow moved to its lowest level in 3 weeks, creating a weekly red trade triangle. As a member of Market Club, you know we have not been positive on this particular index. The reason being was that our monthly trade triangle has remained staunchly in the red column. Maybe this index is indicating something is amiss in the markets. At the same time the Dow fell to a 3-week low, the S&P 500 moved below the psychological 1400 support level. Over in the commodity markets, soybeans jumped to all-time highs and look ready to go even higher. All this is contributing to a higher cost and inflationary pressures in the future. Gold continues to consolidate as we expected, but this is a market that you want to be prepared to buy psychologically on any further weakness. If you have specific questions about the market, post your questions here and we will do our best to answer them in our next broadcast. support@ino.com. Now let's go to the charts and our trade triangles to see what's happening in the markets. Well, as you can see, we're looking right away on the S&P 500, and you can see we've just moved down below the psychological 1400 level. If you remember on our show, we talked about the parabolic is just above this market, and it really hasn't gone over that level on the upside. This is not a particularly good sign for this market, in our opinion, and I think you want to be looking at a psychological trend line here. If we go from the lows here and we draw this out, you can see it's still an uptrend, but we could go very easily back down to the 1390 level, which is about the midpoint of the Donchian trade channel, and maybe even a little bit lower. But generally speaking, unless there's something coming out of Jackson Hole and Ben Bernanke's mouth about QE3, this market's going to continue to erode. Now, we have fallen to an oversold condition already, but again, we've had incredibly 3 very, very quiet days. The market's lower for the week. This will be the second week in a row it's been lower. And depending on where we close tomorrow, could be a very, very psychological area because we've got the long Labor Day weekend, and I think that's going to be on a lot of traders' minds. There's very, very light volume, so we'll see how that plays out. But going to our next market, and this is the Dow, and as you can see, there's our weekly trade triangle we talked about that kicked in today, and let's just move that up here like that. And also with this market, if we draw a trend line, we can go from here to here. So if that's a perfect trend line, if we go on a close-only basis, which is something to look at, is here, and we move this trend line a little bit higher. Let's do that. So grab that and push that up there, and then move this up to here. So you can see we're just still in the zone. Now, this is going to be a very important area where this market is right now. So if it holds this area, then I think we can probably see maybe a little bit of a bounce, but nonetheless, it's below the parabolic. We touched the top of the Donchian trade channel, which we talked about quite some time. The market tends to come back to the midpoint, just like it hit here and here and here and here. So I think we're probably going to get back to the midpoint, maybe have another rally up, and then that's going to be the decider whether we're going to continue higher or whether we're going to have another pronounced move on the downside. So let's go to the NASDAQ. The NASDAQ actually probably looks the healthiest, but there again, it looks a little bit wobbly to us. If we see the market go below the 3,045 level, it's not that far away, 7 points away, I think you would see more pressure coming in this market. It is lower for the week, I believe, and if you just put the charts in, you can see basically that's where we are. We closed the last Friday right here at 3,069, and we're 3,052, so it's about 17 points lower. Not a big move, but it's just flattened out a little bit. It seems to have lost its momentum and mojo. So moving to the US dollar, the euro, let's get this a bit closer around 3 months. And you can see here, this is what we're looking at. This is market. It's beginning to look a little bit suspect. The major thing we look at in the euro is our monthly trade triangles, which are still negative from 139.69. Now, the market looks as though it potentially could be rolling over. It's not quite clear that's the case. But if we go below the lows, I say these lows right here, then I think you'd see more downside pressure. We're not quite oversold. We're getting there, but not quite oversold. We certainly could see the market come down to the 124 level, which is not that far away, given the fact that it's the midpoint of the Donchian trade channel. So we're still remaining negative on this market. We still have a 120 to 117 target zone, and we're going to stick with that until we see either a change in our monthly trade triangle or something else comes along. But right now, that seems to be the way it's going. I don't think we can get rid of all this debt that's over in Europe, and I don't know how they want to paper the walls, but generally speaking, somewhere on the line here, we have to pay the price of this exorbitant spendthrift ways of Europe. And it's going to be tough. That's no question about it. So let's clear the screen off and go to our next chart. And this is the NYMEX crude oil. And as you know, we've been a little bit negative on crude oil. We didn't follow the move. We didn't, at least long term, we did not follow it. On a weekly basis, yes, we got long right here at 87.50, and the market's at 94.80. So 94.60 rather. But generally speaking, the market really tuned down. We were very disappointed this market did not do better because of the hurricane. Certainly that was a very good clue when the market started coming down, the hurricane hit land. It was telling you it was really pretty much over. So we're getting into an oversold condition. We're at the midpoint. I think we could see this market come back down, maybe to even to the 93 level. In fact, if you put the Fibonacci tool on here and scope it from the highs to the lows, then you can see 50% is 92.72, which is, let's say, rounded up to 93. Generally speaking, we'd see this market come down there and it'd still be a correction in an intermediate term uptrend. Longer term, the trend is down, but intermediate term trend is still positive based on our weekly trade triangle right here. So let's go to our next market. We're going to cover the grains in just a little bit, so just stay tuned for that. But this is the gold market. This is I really like this market a lot. And this is a couple of things I'm looking at. And let's just put our Fibonacci tool on here again. So we're going to go down here, and let me scope this in a little bit further so you get a really close picture. So this is what we're looking at in gold. One, we're getting into that zone where it's been oversold, like here. And so I think we're getting oversold, but we still see the uptrend in this market. Also, the 38% level is right here, 1,643, so 1,643. And then we have a 61.8%, which is 1,623. So they're the two big numbers. I don't think we're going to see that number hit. I think we could get close to this number, maybe around 1645. But given the fact that, one, it's a bull market. Two, we're oversold. And three, we're close to a fib number. Now, I think given the fact all these three elements are in play, I think this is going to be a market to maybe look to buy either tomorrow or next week. But certainly I want to be long this market. It's not unusual to get a monthly trade trial coming in, which I came in 1670 and have the market come down. This is remember, this is a longer term play. It's not something we do like we get in 1 week and get out the next week. So psychologically, this market looks like it wants to go higher. This type of action we consider to be bullish. This sort of falling off like this, we consider that to be bullish action. So let's clear the screen and go to our next market. And again, you have the trade triangles on your side on that sense. Now, copper is just kind of like a big yawn. We had a little pop-up today, it looks like, but nonetheless, this market's stuck in a trading range of plus 55. Indicates that this market is just in a trading range. So I don't have any strong feeling on this market. We talked about the 355 level on the upside resistance and the 330 level on the support on the low end of the stick, 332 rather. So I just can't get excited about this market. So let's move on. This is silver. Now silver is coming back down, you can see right now. And if we put our Fibonacci numbers in here, you'll get a close idea of where this market could come back down to. So potentially we can get back down to the 29.39, which is a 50% retracement. That's about another 1 penny drop from here, or $1 drop. I think that's probably going to be a good area to get long this market if you want for a trading turn. We are oversold, which you can see, and we got so close to getting a buy signal on silver, it wasn't even funny. But remember what we talked about a couple of days ago, and that was to buy gold, sell silver on that spread, because we felt that was a better way to trade if you wanted to be trading the markets and hedging yourself. So that's how we still feel the way. That's still the way we feel in this market. But nonetheless, this market looks like it's trying to make a base to go higher. And if we scope it out, you'll see it's a super base that we have here, and it's right here. I mean, that looks good to me, but we still haven't got our indicator yet. And I think if we get the indicator move over these highs that we saw in September, in August, in September, then I think we'll be on our ways to go higher. So let's see what happens. We're looking forward to September. I think we'll see more activity, more people coming back from vacation and wanting to trade and getting involved in the market. So let's see how that works out. So let's go to our next market. By the way, last time we had big inflationary pressures back in the 70s, it killed the stock market. So that's something to remember too. So this is the Reuters-Jeffries CRB index. Again, it's indicating inflation. We got our monthly. We have our monthly positive right here, and our weekly, and we have a plus 75, which means the trend is up. You're consolidating right over the 305 level, but the main area here in my mind is the 320 level, and that's when you have a long-term, I think it's a 16-month trend line comes in right around here, and if it doesn't go through there, I'd like to see it come up, come back down, and then go through. I think that would be a phenomenal sign, but we are getting to be a little bit oversold. We've come out of that, but it looks to me like you want to be long this index. So let's close the screen, also clear the screen, and get to our next market. Next market we're looking at is going to be, okay, hang on one second. What's going to be natural gas? I want to go back here, and let me just refresh this up. We want to look at soybeans, wheat, and corn. And here they are. So here's the soybeans. Soybeans made all-time highs. This is the highest we've ever seen soybeans, $17.69. The high today there was $17.71 and a quarter. I mean, watch this over the weekend. If we have a close up here on the weekend on highs, you want to be long over the weekend. It's that 52-week rule we talked about. Looks really, really good. This is going to contribute to inflation. There's no question in my mind about it. So let's go back to our next market. That's wheat. Now, wheat appears to be, this is what I'd look for in wheat. Let's just put a close-only chart on here. And I would say if we see this market move over the highs, normally when you see a move like this, and then you sort of just fall off like this, it's actually, I think, very, very bullish. Now, if we go back over these highs here and here, and that's right around the 920 level, we're 909 last. If we go over those levels tomorrow and close there, it's going to look awfully good for this market to go higher. And if we clear the screen, we'll tell you exactly what we're looking at here. Our highest close we've seen in this market was at 951. So we actually went almost a dollar break from here, which is a huge amount of money, about $4,000 or $5,000. And we've come back up. And if we go over those highs again, this is the highs to be exact. The close only high was 926, and the close there was 920.75. So that's, I would say, if you want to be really conservative, 930. If it goes over there, then you're off to the races again. So let's look at corn. This is the big one, the drought, low yields, everything else we want to call. And again, this is a market that's basically just beginning to support itself. This is not a top, in my opinion. This is just a rest to go even higher. So it's not unusual for a market to have a large move up like it did from here. Here's the weekly trade triangle. You see we've got very close very early, 5:44. Market's currently trading at $8.15. And it would appear as though you want to be long this market. I still like the corn from the long side. It's not done with on the upside. So anyway, this is Adam Hewison. We've covered a lot of markets. We've covered a lot of things. Watch that Dow on the 3-week low. That's a very important level in my opinion. And also look at the psychological 1400 level on the S&P. Plus watch the soybeans tomorrow on the close. Friday is always a good day to watch the markets and see how people are going home, especially for a long weekend and a long holiday weekend. So I'll see you tomorrow. Adam Hewison for Market Club. Have a great trading day.